Hello everyone, welcome to today's backtest video, and this is Monday 26, 2026, and our backtest will be on US100, which is Nasdaq CFD. So US100 displayed a strong bullish movement on the daily time frame, which you can see as let me take this up, which you can see right here, and our backtest will be on this particular candle, that's 26th Monday. Okay. Now dropping back to the 15 minutes time frame. So this was the start of the day at 12 a.m. Okay. This was the start of Monday. And on Sunday, after the close of the market, this was the close of the market on Friday. And you can see the gap right here. This is a new week open gap. Okay. Maybe I'll discuss that in a future video. This is a new week open gap. So this is the close the of the markets on Friday. That was 23rd of January. And this candle right here, down here, was the open, which was formed on January 25th on Sunday. So during the open of the markets before Monday, prior to the start of Monday, you can see price dropping down to this level. You can see this low and this low. What is resting below these lows? Sell stops. Sell stops are resting below these lows. Okay, and you see price taking out sell stop and rallying up prior to Monday. Okay, which tells us that price will be price will likely be bullish on Monday, or price will likely want to run up or buy stocks or buy side liquidity on Monday, simply because price has taken out what sell side liquidity. And once price takes out sell side liquidity, price is going to run for buy side liquidity. And where is most obvious buy side we can see in the market? This is it. Okay, this is Friday's high, by the way. Friday's high, and this is the obvious buy side, which price we likely want to run up to. So this was the beginning of Monday. As you can see, price actually took out the buy side, which we will be discussing briefly. So this was the start of Monday. Okay, and I want to bring your attention to something. Remember an order block. An order block is a change in state of delivery in price. So you see this sell side delivery being offered, this down close candle right here, and you see it was followed by the up close candles. These up close candles. This is actually an order block. Okay, for newly developed students, you won't notice this, but if I switch over to an higher time frame, you actually see that it's an order block. Let's go to the 30-minute time frame. See, this is it right here. The down close candle followed by the up close candle. Okay. So the moment this up close candle trades above the open of this down close candle, validates it as an order block, and it's also trading above it. And you can see the extension of this up close candle is about twice the body of the down close candle, which makes it an high probability order block. Okay, and you can see price dropping into it. We're expecting it. Okay, prior to Monday. So this was the start of Monday, and during the London session as well, after 4 a.m., price run again into the order block, taking out this low, taking out what sell side liquidity from this low, sell stops from this low, and rally up further. Also, while price traded into the order block during the London session, it traded into the Friday fair value gap. Friday, this Friday first presented fair value gap, also Thursday's first presented fair value gap, which is just above Friday's first presented fair value gap. But I talked about first presented fair value gap on my previous videos, and I won't want to waste my time talking about it on this video because that's not really my focus for this video. Okay. So still on the 30-minute time frame, you can see price running from this fair value gap after trading into it, rallied up. There's a small fair value gap formed right here. Okay, let me just draw it for clarity's sake. Okay, so see price rallied up, created this fair value gap, traded into it exactly at what time? At this is 8:30, which means something is going on at this particular time. Let's drop down to a 15-minute time frame. Okay, on the 15-minute time frame, you see, let's go to a 5-minute time frame. You see it clearly. So what was actually displayed here was the ICT 2022 mentorship. This is a 30-minute fair value gap. You can see price after 8:30. This is 8:30. This is the 8:30 candle, the 5-minute time frame. After 8:30, you can see price running down these lows while trading into this 30-minute fair value gap. Okay, these are actually relative equal lows. If I drop down to a smaller time frame, you see it clearly. Let's go to the 1-minute time frame. So it's not necessary that price has to drop down below relative equal lows. Okay, sometimes it might just be a low. It might just be a low sometimes. Let's draw this out. Sell side liquidity taking out back to the 5-minute time frame. And remember, this is happening after this whole move right here. Price dropping down to take out sell side liquidity at these lows. Okay, and it's running up to what? Buy side liquidity. And now we are at this point at the New York AM session, and you see how price uses this sell side to run up into the buy side liquidity, which is here, which is at this point. Now after 8:30, price runs down relative equal lows, takes out sell side liquidity, also running into this 30-minute fair value gap. Is it running into the 5-minute fair value gap? Sorry, 30-minute fair value gap. Then displace, it went up with what? With displacement. You can see this strong movement upward. You can see the candles going up with displacement and taking what? Taking out these short-term highs. Okay, which validates that price wants to go up, wants to rally up, is willing to rally up. Now you can see this fair value gap being created right here, but price couldn't trade down to it. It shows that price was strongly bullish at this point. There's a 5-minute fair value gap. So price didn't use it. Price couldn't trade down to the 5-minute fair value gap to run up. So I actually went in long on this trade. At first, I placed my buy limits at the top of this 5-minute fair value gap, hoping price would trade down, trigger the buy limits, then run up to buy side, right? and I'll show you the order at the end of the video. But I also saw these pockets in price. See this smaller fair value gap and also this one. Let me just draw it out. I'll draw them out. Now drawing this fair value gap, you don't draw it from this high to this low. No, since there's a volume imbalance right here at the bottom, you have to give room for the volume imbalance. So this is how you draw it correctly. So you give room also for the volume imbalance. To these smaller pockets right here in price. So there are some times whereby price will likely run down to this 5 minute fair value gap, then run up just like it ran up after hitting this particular fair value gap right here. But this time around, price couldn't even get to this fair value gap at the middle before even running up. It shows that price was strongly bullish for this particular day. Now let's go to the 15 minute time frame and see how this played out. So I'll take this up. So on the 15 minute time frame, you can see 15 minute time frame also created its own fair value gap. So there are some times whereby the market might likely not use the fair value gap formed at the 5 minute time frame, but use the one formed at the 15 minute time frame. And there are some times whereby it can use both the 5 minutes and the 15 minute time frames fair value gap. So this time around, price made good use and clear use of the 15 minute time frame fair value gap. So I'll draw that out. So the fair value gap goes like this: the high from the high of this candle to the low of this candle right here. So this is how we draw the fair value gap: the high of this up to the low of that candle right here. There's your midpoint, and you can see price. You can see price was not able to get to the midpoint of the fair value gap. Okay. This indicates bullishness. Price is price is strongly bullish, and you can see this strong rally up in price after the open of the market, which is 9:30. Price dropped in into the 15 minute fair value gap and rallied up to take out buy side liquidity beautifully and so swiftly. This was so fast. There's something I would also like you to see before ending the video on the 1 minute time frame. So this is price making use of the silver bullets hour. Silver bullet is from 10 a.m. to 11 a.m. So when price traded above buy side liquidity at first, it didn't really trade up. Price didn't really trade way up above it, just traded a bit above it and went down. Price went down to take out this sell side liquidity right here, sell stops right here, as you can see. Now this is like a macro, a smaller version of what has played out in price. And you can see price making displacement upward, forming a fair value gap. This is happening at the 1 minute time frame and also at a significant time. Okay, this is a ICT silver bullets time window, 10 to 11 a.m. and this is happening on the 1 minute time frame. So for those thinking you can't trade with the 1 minute time frame, you can actually trade. There are some traders who believe the 1 minute time frame is all noise. Don't worry, stick long enough for me on this channel and you see how the 1 minute time frame is being used to trade this kind of markets. So price takes out sell side liquidity, displaced up and form the fair value gap, traded up to the upper quadrants of the fair value gap, then make a rally upward to take out the buy side. You can see it even moved upward further. So quickly, I'll be showing you the executions I made on my MT5 on my profit accounts. So this is a 5 minute time frame, and let me show you the trade orders, the trade history I mean. So this is a 5 minute time frame, and you can see when price trades below this relative equal lows to take out sell side on the 5 minute time frame, rallied up, formed the 5 minute fair value gap, which it couldn't trade down to, and you can see my order here, my buy order right here. So I had the feeling that there was a chance price was not going to trade down into the 5 minute fair value gap. So I made use of the 15 minute fair value gap instead. And you can see price rallied up. So take out this high right here. That's Friday's high. And around that level, that was when I took my profit. And around that level, I closed the trade. So I hope you found this insightful. If this has brought some value to you, drop a like, subscribe, and don't forget to do your own back test as well to study price, and you see from time to time you start getting better at it. So until next time, God bless.